This is Michael Reeder, CPA. Have you recently expanded an already existing business? Let's talk tax implications. If you're expanding your business, that implies that you're making more money. It also implies that you could be incurring more expenses. So I'll talk about the former. If you are expanding your business and you're making more money, it might be time to switch your tax classification if you're an LLC. You may have started out as an LLC, taxed as a sole proprietor because it was just you, but now it's still you, but now it makes sense for your LLC to be taxed as an S corporation. And so now let's unpack that, right? So what are the tax benefits of being an S corporation? The main tax savings in being an S corporation compared to a sole proprietor or a partnership are saving money and also a C Corp in certain contexts. But the main reason why you want to elect S Corp treatment for tax planning purposes is to save money in self-employment taxes. Now, self-employment taxes is another terminology for Social Security and Medicare taxes. So when you're taxed as a sole proprietor or a partnership, and the partners are actively engaged in the business, then that net business income and that sole prop or partnership is taxed is subject to not only income tax, federal and state, but also self-employment tax, federal self-employment tax. Now, federal self-employment tax is 15.3%, and it's 15.3% of the net business income. So when you're taxed as a sole proprietor, then that net business income is subject to federal and state income tax, depending on what state you're in, federal and state income tax, and then also 15.3% self-employment tax, and that's another term for Social Security and Medicare tax. So when you convert to an S corporation, when you elect for your LLC to be taxed as an S corporation, you take a reasonable salary for a portion of the profit and you pay the 15.3% self-employment tax on the salary piece only, and the remaining S corp profit that you didn't take a salary, while it's still subject to income tax, it's not subject to self-employment tax. So that's a 15.3% tax savings on the portion of the profit that you did not take a salary. So as you're expanding and you're making more money, you might be at an income threshold where it makes sense for you to take your single member LLC and elect for it to be taxed as an S corporation. And by doing so, you're going to save a boatload of money in self-employment taxes each year, year over year over year. And another content piece, for another day is how Social Security benefits work, right? Like, do you get a dollar for dollar benefit for every dollar that you pay in Social Security tax? No. And so there's a whole benefit side of Social Security that we'll talk about on a subsequent episode. You're expanding, which means that you're investing in your company. Are you eligible for any sort of tax credits, like the research and development tax credit? You want to think about these types of things. And back to bookkeeping, maybe when you started out your business, you were just doing the spreadsheet method for bookkeeping, but now it's time to go to an actual bookkeeping platform like QuickBooks Online or Xero or some bookkeeping, or you may be required to use the bookkeeping platform that your franchisor requires you to use if you're a franchisee in a franchisor system, for example. And another thing is payroll. If you were a Schedule C and you didn't have employees, but now you go S corporation if you were a single member LLC, taxed as a sole proprietor, and now you're going to go S corporation, that means that you have to start having a payroll system, at least for yourself. You might have, whether you have other employees or not. If you don't, and now you go from single member LLC taxed as a sole proprietorship to an S corp, now you have to implement a payroll system, for at least giving yourself a payroll if you're the S corp shareholder employee. Have a question? Reach out to me and my Reeder CPA Group team to learn more.